Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has built a $100 million real estate portfolio, but it wasn't until he found himself on life support and paralyzed that he realized how important cash flowing real estate really is. AJ Osborne joins us today. AJ, welcome to Purchase to Profits. It's great to have you on the show.
Thank you. I appreciate it.
Pleasure is all mine. So let's start off by talking about your real estate goals right now.
Absolutely. The real estate market has obviously changed a lot in the last few years. Our goal is to keep acquiring and expanding. We have a value add model and we purchase and turn around. And we are looking for properties that offer that value for us to acquire. But we're very too cautious about taking unneeded risks right now. So we are being a lot more careful with our deals. We don't time markets at all. So our goals right now is to expand to get to over 2 million square feet in just the next couple of years. And we're going to have to put forth a lot of effort to get there.
Yeah. And you mentioned square feet. So are you doing retail? What's your niche?
We're in self-storage. So
okay.
We operate and own self-storage facilities.
Yeah. And is that where you started off? Like, did you just hop into self-storage right off the bat?
Yeah, I guess you could say we did because I was in insurance before, and then we moved into self-storage from insurance. So we'd own some commercial and a little residential, but nothing serious.
Yeah, gotcha. And in terms of the team, like you're running a busy office. So at what point did you start adding people to your team, and how has that growth looked like over, since you started to now?
Well, self-storage facilities are very operation-based. So you do have your on-site employees, but as you grow, it is critical that if you want to grow in a sustainable model, you have to outsource the management or you have to internalize that management team. For us, we wanted to be in control because our value-add strategy is very specific. And so we obviously need to be in control of that. So our internal management team, we built out, and we built that out fairly quickly. Our strategy was to buy, improve, capitalize, rinse, repeat, right? And so after a couple facilities, we added on 4 more people to our management team. I have 2 partners, and we run that, but we have, I think, 26 more employees that are on the ground or regional people with our facilities.
Wow. And somebody might be listening right now and thinking, whoa, that sounds like a lot of rapid growth pretty quick. So what do you think allowed you to scale up as quickly as you have?
So there's a few things. I think the biggest thing was we had a very clear idea of what we were trying to accomplish. We were trying to convert more business earned income into passive income. And we really spent a lot of time sitting down and doing the numbers. My partner and I, we worked through it and figured out what do we have to do to achieve these. And it became very clear that we would have to have, and we always wanted, a scalable model. It wasn't a one and done. We didn't want to just simply replace our income. We wanted to grow. We wanted to build something that would continue growing even if we weren't there. And so we knew that we would have to put a lot of upfront work into that. It wasn't going to be easy. So from the start, we had a growth mindset, and we just knew we'd have to adjust our plan as markets and opportunities presented itself. And when we started, there was a lot of opportunities. So the growth right off the bat went very, very quickly and then started to slow down more recently. So it was a mix of plans and opportunity.
Yeah. And whenever you have those two going for you, it's always good news.
Yes, exactly.
Yeah. So have you developed any routines or rituals that have helped you be successful?
So routines and rituals that I would say developed in our underwriting approach. We have very specific ways we go about it. And we don't divert from what we're trying to achieve, even though our metrics are very high. And we keep being told, well, in harder markets like this, you need to bring down your expectations, or you need to adjust with time. And so we say, yes, we adjust our business practices, but we don't adjust our goals. And we don't adjust. It's not that now all of a sudden I'm just going to start taking lower returns. It means that I'm going to structure and do deals differently. So in our underwriting practices, we are very stringent, and we're totally fine passing up deals. I don't want to do a bad deal today that ruins my future. So we're strict, and we stick to our guns. Even deals, I've had deals that I wanted to do. I wanted to do them so bad. I wanted that asset. I wanted that location. I wanted to expand into that market, and we said no. And we walked away from them. And two, that's hard, because when you're that rigid and that strict, you're walking away from deals that you know are going to be good, right? It's not that that deal is going to fail. It's not that that deal is not a good deal, but that deal doesn't meet our requirements. And so we walk away. And one of the big reasons for that and being so stringent is that there's an opportunity cost. And if I do a lesser deal, I know I'm giving up an opportunity at a better one. And so as long as it meets that requirement, we'll do it. If that means I have to wait a year to get that deal, that's fine. I'm not a massive fund that's going out, and don't have unlimited funds where I'm going to go buy, 5 to 20 storage facilities a year. That's not me. I need to be strategic. This is my money, and I got to be careful with how I grow. And we've been very, very strict with those.
Yeah, that takes a whole lot of discipline. So do you guys review your criteria maybe quarterly, or because it seems like it's very top of mind with everything you're doing. So are you constantly reviewing your criteria, or how does that work?
Yeah, I would say that our criteria lines up based upon priorities. So with our roles, we have some that are just breakers, right? They're deal breakers. You just don't go past this. But as far as market size, for example, we would prefer to be in a market that looked like this. But we found early on, if I was in a market that may not be as preferable as this market, but the deal is really good, then I'll take that deal as opposed to going to a market that's really good, but the deal's just okay. Mm-hmm. So we are fairly flexible on some of our criteria, but we have some what the rates of return that we have to hit and things like that we just, we hold very, very strong to those. But once we start going down the line, every deal is different, and you have to be flexible in real estate investing, right? So you have to be able to make deals work. And we've done everything. We started out and we're never going to build, right? We're just we're never going to do it. A year later, we were developing a huge facility. Then we're okay, we're not ever going to do that again. We're only going to buy, acquire. We're only going to turn around. That worked out great. It was awesome. And it hit everything we wanted, but we're just going to go to acquire, and we're going to stick to these markets. 6 months later, we were buying a bankrupt Super Kmart in a totally different market, and we were converting that into a self-storage facility. Because if it met our top line requirements, that outweighed everything below.
Yeah. And how have you guys approached raising capital? with your very first deal, did you syndicate that, or how have you grown and brought the capital along?
So our capital comes from internally, and it comes from our cash flow or our refinancing and putting deals in. That means we have to sacrifice. When me and my co-founder started, we worked for years while we were running our real estate business, and we had millions of assets under management, and we still worked. And in fact, I still have other companies that I run and keep doing, because that capital is valuable to me. And I know that capital put into my system can generate wealth and can generate return. So I don't want to use it. So we try to take that capital and redeploy it into our system as much as we can. Now, there are some deals that we've partnered with, and we're not against partnering by any means. And we've had one of the larger deals that we got with the right people, the right partnering, and we had somebody that came in and helped with the financing too. And that worked out great. So we look at deals very individually. And in this market, assets versus 5 years ago are at a much higher higher cost and the risk is a lot higher on getting those deals done. So we are more open to alternative options of funding those deals, of purchasing, where we're going to go, how we construct the management and the offering of those deals that we weren't open to just 4 or 5 years ago.
Yeah. And so in the introduction, I mentioned that you had some experiences that really taught you the value of cash flow real estate. Do you mind telling us that story?
Not at all. It's true. Cash flowing real estate is near and dear to my heart for very specific reasons. And I was very, very fortunate that I learned that lesson a while ago and realized that although I had a good sales job and I was making good money, that I was on a treadmill and that treadmill could stop, right? And I thought, I need something that even if I don't work, will still come in. And that was why we started building up. When we got away from that earned income, got into more of a passive income. And we spent years building up this assets. And finally, we got in the management, all the assets up and running. It was profitable. And we're like, life is awesome. And out of nowhere, I became paralyzed and ended up being paralyzed from head to toe, put on life support, breathing tubes, the work, and stuck in a hospital. And I'd got something called Guillain-Barré, and it's where your white blood cells, you get an infection, your white blood cells go to attack the virus, and for some reason they register your nervous system as that virus. Oh. They started attacking my nervous system. Within days, I could no longer breathe, going from being perfectly fine. And they sent me into the ICU. They put me on breathing tubes, and they ended up moving me to a long-term facility to take care of me, because we didn't know if I'd ever walk again. We didn't know what the outcome was going to be like. And I had to relearn everything. I had to relearn how to use my hands, my arms. I had to relearn how to walk. And obviously I couldn't work, right? My job that I'd had previously was gone. I was now disabled and could have been disabled for the rest of my life. No one knew. And that was terminated. And my wife, she didn't have to worry about, paying bills, making our mortgage payments. She didn't have to worry about those things because we had passive income coming in. And there's probably nothing that was more of a blessing in our lives, knowing that we could worry about me. We could worry about taking care of me, getting the basics done, that I could take care of my children, and I was fully paralyzed. And that, it saved our financial life, but too, we think that it had a huge deal to my recovery and how well that I recovered, because I could spend time focusing on me and not having to stress out and not worried about, all those financial things, and not having my wife have to go get a job and leave me. She could stay at home and take care of me. And that came from passive income generating properties. And it was probably the greatest thing that we ever did in our lives.
Yeah, that's huge. That's huge. Well, I'm so glad everything worked out. That's a crazy story.
Yeah, it was, and two, it was out of the blue. I mean, I'm relatively young. I'm in my, early 30s, and I backpack, I ski, I fish, I was active. We were at the PGA Tour the week before. We were traveling, running around, having a great time. Yeah. And then one night I just got sick, and I went in the bathtub because my legs hurt and I couldn't get out. I was paralyzed. Yeah. And then in the hospital, I went from living a perfectly normal, this just great life, had a great job and great side business and great assets, to I don't know if I'm going to make it through the next week. And then they put me into a coma, and I woke up staring at a wall. And we have 4 kids, so it rocked our world, as it obviously would anybody. Yeah. And that reassurance and letting me take care of myself and getting back to where I am today, it really cannot be understated.
Oh, absolutely. And I think anybody who's discovered passive income and the benefits of real estate, like that's it, like a situation like yours, like nobody ever thinks about, just going in the tub and all of a sudden you can't get out. But I think lots of real estate investors want to have that stability just in case something does happen. For myself, I want to make sure my son's looked after if I get hit by a bus tomorrow. Right?
Yes. Yeah. I mean, honestly, I was just looking at maybe traveling more, like, oh, well, I just won't have to work as much. And two, just the idea that I don't have to work for a wage. Everyone can relate to that, right? I mean, financial freedom is so at our core. In America, we all have freedom, but it seems on a day-to-day basis, you're like, I don't feel free. I got to work that 9 to 5. I got to sit in traffic. I got to go through all this stuff. I'm not living life on my terms, and most of the decisions in my life aren't being made by me. They're being made by other people. That ability to have that kind of control in your life and that freedom to make choices of when you wake up in the day, how are you really going to spend your day? And then the efforts that I spend in my day are going towards my life, and then I'm reaping the rewards of those efforts. It's an amazing opportunity and ability to live a life like that. And for the most part, hard work, knowledge, and investing in real estate, you can achieve that. Now, two, some people may want to replace their income, but other people, they may want to build an empire. And with real estate, you can actually calculate that. You can do that. It's not like a startup where the market will decide. Like, these are numbers, and you can develop a strategy that you can repeat over and over and over again. And that's all we did. We developed a strategy where we could come in, we could create value, increase cash flows. We could take that value, we could take that cash flow coming off, we could reallocate that and repeat the same process. Well, once you figure that out, and once you do that and you build it up, then we have a management team that we train, build it up. All of a sudden I separate my time from income, and the machine doesn't even stop, right? If I go to Hawaii, they're still growing. They're still making more money. Equity's growing. When I was in the hospital, and when I finally went home after months and I was lying in a bed paralyzed, and I finally started getting up and getting around, and learning how to walk, everything again, the whole time, my net worth was growing that whole entire time. And, then I could come back and figure out, what do I want to do with my time now? How do I want to spend each day? And that effort, putting that effort towards yourself is so important. And whether it's on the side, investing in real estate, or figuring out a system that is repeatable for you, that your effort is going towards your future and protecting you and giving a life that you want to live, that just has to be standard for everybody. It really does. And most of us don't think about this till it's time to retire, thinking that the government's going to pay for it, and all of a sudden realizing, well, that's not a lot of money, and going, I wish I would have started this 30 years ago.
Yeah. Then you end up working in Walmart when you're supposed to be retired. Yeah.
Exactly. If you wanted to go buy a fourplex, just one fourplex, and have it paid off by the time you're retired, I mean, you're going to make more income on that fourplex than you'd made off all your retirement. And that's just one deal paid off on your retirement. I mean, rents are going to be like 3 times whatever they were when you bought it. And then all the debt's paid off, and it's going to just all cash flow to your pocket. And then you can go sit on a cruise and travel the world off one investment. Think about how one investment can change your life. Now think about 6, 7, 10, and accumulating. And it's hard because it's slow at first, and it takes a lot of work. But once that compounding starts to take action, it really starts moving and starts working, the results are truly incredible and life-changing.
Yeah, no, 100%. So let's talk about a Keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
There is one that comes to mind, and I'm not sure exactly the impact, other than maybe it was one of my favorite deals we ever did. It's hugely successful and everything like that. It was just so unique. I got partnered with a guy called Reed, and his name's Reed, and he was in Reno, and he said, hey, I got this deal. I'm not a storage guy, but I'm a development guy. There's this bankrupt super Kmart. Maybe you could come together. We could come together, right? And we could turn this into a storage facility. And I thought, it's a great idea. Went, and we did. We turned this bankrupt super Kmart into this huge storage facility. Not only a storage facility, but that storage facility can be completely automated and ran off the phone. So you can check in, buy a unit, use it accesses the doors, it accesses your units, everything right off the phone. And that deal showed me, first of all, the power of transitioning one asset into another and taking this commercial and making something new, something that was extremely undervalued, nobody wanted it, and turn it into one of the hottest real estate asset classes right now. And the value from that deal was astronomical. It was, we were in the whole thing, maybe 8 million, debt, everything, and financing, and it's worth over 25 today.
Nice.
And that was in a year. And so that was a real big eye opener of what you can do when you reach out, when you partner with good people that are really good at what they do, and combine what you're good at you can do some pretty amazing things.
Yeah. And how long was that property marketed before you guys picked it up?
A long time.
Yeah.
It was years, and they were wanting a really high price, and it was not worth it. And
Yeah.
it took them a while to realize that nobody was going to buy this property.
Yeah. I'm always interested in, you guys saw the opportunity there with the conversion. Why do you think you saw that and nobody else picked up on the potential?
So, it's a lot of people are like, oh, I wish I would have had that idea, or I wish I would have seen that. And I've realized that unless you know what you're doing, the opportunity doesn't show itself, right? So if I hadn't been good at managing facilities, and if I hadn't known how a storage facility would perform in a given situation, I would have never understood the deal, because I couldn't have seen the value. But because we were really good at operating, managing, running facilities, I could take our model and take what was currently existing and put our model on top of it, and it would literally spit me out the results. So it wasn't even guessing. It's not like I was gambling. It's not like we were like, oh, well, we hope this turns out. No, not at all. We knew how it was going to turn out. We knew in that market how that asset would perform. And so when the opportunity came, it was just a no-brainer. It was like, yeah, this is a perfect opportunity, capitalize and do it, right? Well, to somebody that's not in that space and not doing those things, you can't find those opportunities. And that's one of the biggest things for people that are looking to find opportunities in real estate. It's really hard to find opportunities when you're not doing it. Yeah. And so, you got to get out, you got to get active, you got to start investing, you got to start learning the trade. And as you start learning how, you start seeing more and more and more opportunities. The opportunities that, even the Super Kmart, right? That opportunity when we first started in storage, we would have never done, ever. We would have been like, I don't even know how to value this. That's huge risk. Now, when we did it, the risk was not really even there. It didn't seem like any risk at all. It was just, once again, kind of a no-brainer.
Yeah. And you mentioned that Reed brought the property to you. So how do you approach partnerships, and what do you look for to make sure it's going to be successful?
So first of all, it depends a lot on personality. And I got to tell you, it was with Reed, this particular gentleman, he was just a good guy. I really liked him. He's smart, but he was trustworthy. And we hit it off, and that's really important to me. I want to work with people that I like, and that, when I go down there, we go out, he takes me out fishing. He took me out fishing for the first time, and I was still partially paralyzed, and he takes me out with his buddy right into the river to go fish. Those kind of things, this is life, right? And those are the kind of people I want to do business with, that I want to be around, because in especially big partnerships like that, it's kind of like a marriage, right? When something's going wrong, we got to call each other and talk about it, because there will be problems. And so first and foremost, those partners, you got to be with people that you get along with. And you only know that if you're networking. It's not like you could just call somebody out of the book, hey, I want to do this deal. Are you going to put money into it, right? Well, they don't know if they want to work with you. They don't know, there's a lot of deals out there. You need to be out networking. You got to be meeting with people. Reed, I met at we have a group that we were a part of. It's a co-op that we're a part of, and it was at a dinner. We were just sitting at dinner, sitting beside each other talking. And that's how these deals, though, are made. And lots of times when people are like, why didn't I hear about the opportunity? Well, you weren't with the people that were creating the opportunities. So you got to get out. You got to be with those people that are actually creating the opportunities, that are doing things that are different, that are changing it, right? If I wasn't in that event, and if I wasn't with that person, I would have never met Reed, and I would have never been like, not only is this a good deal, but I want to do that deal with you. So opportunity is cultivated. It is created. It is not thrown on your lap. It's not, it takes effort to receive opportunity. And the more effort you do, the more opportunity you see.
Yeah. And it's so fascinating how the coolest deals always end up working out by chance, a chance meeting, or probably 20 guests I've had on the show have similar stories of just a fluke meeting, and that turns into this mammoth deal or this really interesting deal. It's so neat how that happens.
Yeah, it is. And it's, for me, it's about progress. It's about moving forward. It's about, cultivating. And that's the exciting thing about, if you are moving forward, if you're taking the right steps, and you don't know what's going to come up. And, if you're moving in the right direction, it's going to be good things. Right. Yeah. And life is amazing. And, there's just so much opportunity out there that you got to keep moving forward, and you got to be cultivating these activities, these relationships, and these deals. And if you do it correctly, if you're networking with the right people, cultivating yourself and surrounding yourself with good people that are, builders in mindset, they're trying to be better, you will become better, and you will receive opportunities to grow, both personally and financially along with it. But it is active. It is a conscious thing that needs to be had. I consciously make efforts to network, and I go out to lunch with people. I have tagged people that I know. I want to be like you. I want to be around you. I want to emanate really your skills and things like that. Well, go reach out to those people, and that helps you. And then through there, you cultivate opportunities that don't ever hit the market. Now, one of our deals that we ever purchased was on the market. So I think maybe 45% of them was brought to us by an exclusive relationship that we had with a broker. That was because I met him by accident at a breakfast meeting, and he brought us almost 50% of our portfolio off market that has created millions and millions in wealth for us. Then the other 50%, it was from us beating down doors, knocking, talking with people, and saying, hey, we love your buildings. Let's talk, we talk about maybe buying your facility from you. It wasn't sitting around and looking on the MLS and waiting to see what came up and wondering why no good deals come on the MLS. That doesn't happen.
Yeah. Yeah. And for yourself, looking ahead, let's say 10 years from now, where do you see your company going?
So in 10 years from now, I see us really kind of taking it to the next level. We have over 1 million square feet in storage, and we're starting to do a little more innovative things. We have a lot more people that are interested in partnering with our firm. One of the reasons is our unique value of finding value in these assets and turning them out, which generally leads to much higher returns. And two is a safer investment than not. And so with that comes a lot of opportunities to move forward. And so I see a very dynamic change in the way we've done business in the past and moving forward, and doing a lot more with partners and getting deals that people are like, I want to be involved in this, and like the Reno deal had before, instead of exclusive deals. And that's really going to take us over 2+ million square feet and get us to 15 to 20 plus facilities in the next 5 years.
Yeah, that's great. So AJ, if somebody's looking to get in touch with you, learn more about what you're doing, where can they find you?
The easiest way to find me, I have a blog. It's Cashflow2Freedom.com. That's the number 2, Cashflow2Freedom.com. My email's on there. You can AJ Osborne Instagram. So you can go to the site, go find me on Instagram, Facebook, message me. It's just me. I answer it. And so, yeah, pretty easy to get in touch with me.
That's great. Well, AJ, I just want to say thanks so much for taking the time today and sharing your success with us.
Absolutely. Thank you so much for having me on. I really do appreciate it.
Yeah, it was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.